Mr. Price Group is value-oriented. It's mostly a cash, fashion and home goods retailer.
Right, and we're going to talk about them here because it's got an active online platform. They even went to the trouble of changing the share code on the JSE in order to synchronize it with the web address.
Market cap, 56.4 billion rand, trades on a price to earnings ratio of 19.8, dividend yield here of 3.2%. Talk to me about the online trading platform so that we can skew the conversation with
sure.
Mr. Price to the same.
So Mr. Price, again, it's not an online trading platform. Let's just be very clear. I think the online trading revenue came in at about 157 million total revenue for Mr. Price is almost 20 billion. So it's a tiny portion of the overall business, but they really are actively pushing into it. So you see massive growth numbers out of the online space. So I think like in the South African side, I mean, they were growing at 120%, and we expect that trend to continue. I mean, something within the online space, you'll really see the shift from Mr. Price Home, which was a smaller portion of Mr. Price's overall portfolio, is doing exceptionally well online compared to the apparel. So people obviously liking to buy their furniture, but they want to go to try on the clothes in the stores still.
So basically, how does it work? You call up stuff. It's a web-based application as well as an app, I presume. And if you want to buy a fresh set of tablecloths or something, onto the online site and then delivery at home. No worries.
Exactly right, yeah. So, I mean, Bronwyn's used the app, so she can probably give you a good idea.
I nearly used the app to buy Christmas decorations, but just didn't get to push.
Because that's the exact kind of thing that would be
that's the one thing, yeah. I mean, there's free delivery. I mean, they've scaled that back, obviously it's over a certain amount. So, interestingly, in the non-South African businesses, so more, into Africa, they've actually increased the minimum purchase value before they do free delivery, which saw the non-South African online sales coming off a little bit in the latest results, but still kind of I think the place retail has to move into.
Our relationship, the hot stocks relationship with Mr. Price. Let's talk about that.
We had a very small position because at some point we did have some money and we just bought a few because we liked it. That was in late 2015. They did quite well for us.
That was in the happy days when we had some money.
We exited in a recent spike because Sid Vianello felt that they were a little bit overbought and that they were a little bit at risk in future earnings periods because of competition. So we sold them there somewhere along the line in 2016 in that little sort of bump, but they've since gone higher.
Which means you've completely lost out on this recent rally, which is quite an aggressive rally, actually.
Well, we sold ours, it's actually quite difficult to see on the 5-year chart. We sold ours at 195, and in recent days they went back to 211. So it hasn't been
not a train smash.
Yeah.
Gary, do you own it?
We don't actually own it. We prefer Foschini in the retail space, and that's just a valuation thing. I think Mr. Price is actually, if you look at return on equity kind of valuation, metrics at least, it's a stronger company.
We recently bought Foschini.
Yes.
Yeah, and I think Foschini is the better buy in the sector. It's also performed far better over share price wise over the year. But Mr. Price, don't get me wrong, it's a fantastic company. I mean, they've grown headline earnings. I mean, it's always in their report they give you the stat. But over the last 30 years, your headline earnings growth compounded is 23%, I think. In dividend increases also about 24%. So it's a fantastically, growing company, which is great.
Fantastically growing company, is it hot or not?
It's expensive. It's a 20 PE. Foschini's at a 14. So
it's just a relative game.
Yeah, and it is. To get retail exposure, I don't think you're going to go wrong buying Mr. Price. I think, again, you are buying bricks and mortar. I still rather buy Amazon than Mr. Price, and I'd rather buy Foschini than Mr. Price. So I'm probably going to. I don't want to go not hot because it's a great company, but
you can either go hot or not hot.
I'm going to go not hot because I wouldn't be adding it to your portfolio now.
Clearly not hot.
Not hot.
Hot or not?
Yeah, I'm going to lean not hot as well. Although, as we've noted,
this is a nice
addition to its business model.
Not
Good
hot.
point,
Not
but
hot.
not hot. Yeah.